Okay, hi everyone. This is Lee Goldstein. I'm the trading director at 10 Minute Trades, and I want to welcome you to my 10 Minute Trades 10-minute podcast. So I'm doing a weekly wrap up, and it is February 11th, and it's Friday, and this is something new, unscripted. So I'm going to leave some space for editing, and ultimately you'll get a podcast. So here's the deal. All right. I'm allowed to scratch myself, right? Got my coffee, got my trusty phone, got my new office phone. All right, we're going to be doing some tech support with text. There's a lot of stuff going on all the time. And it's just important to understand we're always trying to bring you a better experience, trying to help you trade, make money, but also enjoy life. I mean, it's not just trading and so serious that you can't enjoy your life. So I mean, for me, if I can't enjoy my life, I don't want to do this. All right. So enjoy life, make money. Money helps you to enjoy life, etc. Okay. 10-minute trades podcast. Here's the elements. We're going to do a wrap up of the week. Not so much how much money I made and whether it was an incredible trade, not a trade of the week. It's going to be what can I tell you that might help you to trade it better the next time? All right, that's what we're going to do. So there's a key element that helped us a lot this past week, and it's the power of testing, taken from Huey Lewis, The Power of Love. The Power of Love, one of the greatest songs ever made. And the power of testing. We're going to talk about how important it is and how it helps you to have very good trades. If you want to learn how to test, we have a lot of videos. There's a lot of ways you can do it. I think it's really important. And then we're going to do the second half of the podcast is going to be the weekly schedule. I'm not saying that I'm not going to make the little short weekly schedule video anymore, but maybe we'll, use this new podcast if I can, do it every Friday, which I'd like to do. We'll use this format maybe for the new weekly schedule also, or we'll edit the schedule out of it. But these are just some of the things we're thinking about, giving you a little bit of knowledge as to what's going on in the back room, so to speak, of 10-minute trades. And I just wanted to talk about a podcast. Our previous 8 podcasts, they haven't really been podcasts, they've been webinars. Okay. But a podcast is audio. So I may show video in this podcast. In fact, I will show video in this podcast so that eventually we'll put it up on YouTube and you can watch it on YouTube. I think it's very helpful for most of the members that are trading. But for folks that aren't members and they just want to hear and listen to the wrap up of what happened during the week, I'm going to try and do my best to keep it as an audio recording, not a video recording. So the thrust of this will be audio, but for our members out there that want to watch on YouTube, because we can easily put it up on YouTube so you can watch it. I want to show the video of the trades, but it's got to be in a way that doesn't ruin the audio for everyone. Okay, so this is new for me, so I got to figure out the best way to do it. I got to figure out the best way to make my hair look good. I think that's a little better. I'm wearing this crazy headset because the audio on this headset is so much better than my little $1 headsets. These guys, if you can barely see them. All right. So I want you to have good audio, good video, and a good experience. I've already taken up 10 minutes and I only have 30 seconds left to do this. So it might be a little longer than 10 minutes today. So let's talk about the week. The week started with actually trade balance, okay? US trade balance, and I'm going to be looking at some notes, so that's why I'll look away at times. US trade balance was 8:30 on Tuesday, February 8th, and it basically had no impact whatsoever. Okay, actually, before I get into trade balance, if you looked at the weekly schedule, the WMM, our first event on the weekly schedule was Sunday evening Australia retail sales. There was absolutely no response to the Australia retail sales numbers. They were matching. In other words, the news was exactly as expected, and the Australian dollar didn't move at all. So then we get to US trade balance, and there was no impact on that report. And as an aside, I am using the results from Forex Factory to help me explain to you what the results were. And just to go over what we mean by the results, we call it the news offset. Let's say they're expecting 100 jobs in the jobs report, and 1,000 jobs are created instead of 100. That's very good news. So that might make the index you're trading go up if that index goes up on good news. If they were expecting 100 jobs and only 10 jobs were created, that would be bad news. But that is a good offset. In other words, if they're expecting 100 jobs and 101 jobs are created, that's a very tiny offset. If they're expecting 100 jobs and 200 jobs are created, that's a good sized offset. Usually, the better the offset, the bigger or the smaller, the better the response in the index that we're trading. So we call that the news offset. When the offset is matching, it doesn't have an offset. If they expect 100 jobs and 100 jobs are created, that's no offset, essentially. We call that matching news. And usually that can create chaos in the index you're trading. It might make it jump up, it might make it jump down, it might make it not move at all. So these are the challenges that we deal with when we're trading the news and events on an appointment basis like we do. US trade balance had a somewhat positive news offset, not huge, and it really just didn't move the market. Now, we've just started looking at the trade balance report, and we're looking at gold. It may be we're going to have to adjust what instrument we look at, but right now it doesn't appear that gold is having a great movement on US trade balance, but we'll give it a few months before we make a decision. We like to at least look at 3 months of data, 3 to 6, to give us a real idea whether a report is tradable or not. In these very volatile markets, sometimes we will start trading an event much sooner because you don't want to miss the event before the markets change back to less volatile. Now, the first event that took place in our trade room this week was the API report. That's the Tuesday afternoon API report. It's a petroleum storage report, similar but with different data than the Wednesday report. And the report was very negative. A lot more oil was used than expected, and they were expecting a build in oil supplies. In other words, they expected there to be more oil available than there was. Over 2 million barrels were used for the weekly data report. And also, we trade patterns and probabilities based on those patterns. The API report has been having a pattern where it's had 2 winners, 2 losers, 2 winners, 2 losers. And I really expected this to be a winning trade because of the pattern that was going on. So what did I do? I set up my charts, and I forgot to put my charts on live. No one told me in the trade room, and we missed an awesome move. Probably would have been easily a $100 trade without even blinking. And we all know that API has been somewhat challenged these days, but the move was fantastic because the offset was very large. You can see the move, and it was just amazing. So for everybody that's watching, you can see it. If you're listening, trust me when I say I made a mistake. I didn't put my charts on live, and I missed an excellent trade to start our first trade room of the week. But you know what? We always say in the room, don't go crying in a corner. It'll happen, and it'll happen again. I have a gigantic sign on my monitor these days, live or sim. And still, I was trying to run 3 setups at the same time to teach people in the room something. But you know what? No excuse. I screwed up. I have to own it. Missed a good trade, but that's life in the fast lane with futures and news events. Our next trade room event was Wednesday morning's crude oil inventories. Now, normally, the data from Wednesday does not mirror the data from Tuesday's API report. They're different data sets. Last Wednesday, though, there was a huge drawdown. They were expecting a build of 1.5 million barrels of oil. There was a drawdown of over 4 million. And just as you would expect, oil exploded to the upside. And it would have been, had you traded it, and we had members in the trade room that traded it, look at the explosion, made quite a bit of money and had positive slippage on that trade. They got some extra ticks in the market because it was a fast, explosive move. Now, we were also talking about taking reversal trades. When you take a reversal trade on oil or on any news event, if the news is unbelievably strong, if the offset is very powerful in the direction that you don't want to take the reversal. In other words, I didn't want to go long, I wanted to go short, but the move was tremendously long, powerfully long. And it's a warning if the news is short. In other words, let me say that again. It's a powerful warning if the offset is huge for a continuation. And that's the setup that we had on Wednesday. It was not a good setup for a reversal because the news numbers were powerful pushes to the upside. It was motivating oil's price to go up. So taking a reversal most probably would have failed if you did it immediately at the time of the report. And we talked about in the trade room how there are multiple ways to trade oil after the report. You could do an immediate reversal, which often works because oil does reverse. But what I'm saying is if the news is against that reversal working, you might want to wait sometimes if you have that luxury and you see the news result before you enter the market. We have another setup called our after news oil and gas setup, and that is a very good way to trade oil after the news. So I think it's better than doing just that quick 1 second reversal because you have a much better opportunity to plan out your report and your move and your trade. So in this case, oil was a beautiful breakout. Members made money that traded it. And if you tried to do the reversal in an instant, it was a loser. But the after news reversal, this week we didn't watch it on oil, but I'll talk about natural gas when we get there. We watched it on natural gas. WASD, WASD, WASD. Everybody knows how much I love the WASD report. We made a ton of money on the quarterly grain reports, the last two, and even the last three. We made about $200 on the last one, and it traded with WASD in January. But the previous quarterly grain reports were amazing. And I love the WASD report. It's a little brother or a little sister to the quarterly grain report. It's almost the same report, except it's monthly. And this month's WASD, it got me. Here's what happened. It had an excellent drop, and it didn't continue. And I was lackadaisically moving my stop. It reversed as I was moving my stop in a nanosecond and stopped me out and grabbed 3 contracts that I still had in the market. I was trading 6 on the WASD. So it bit me. And I really am not blaming myself, although as a trader, you are always very hard on yourself. I was expecting the move to continue, so I wasn't rushing to move my stop to break even after it hit my first target. The price moved down, it hit my first target, and I just slowly started moving my stop, totally expecting the price to continue down. It instantly reversed and hit the targets that I had left in the market and stopped me out for a loss. It was very disappointing. Some members made money, other members did what I did because it was such a fast reversal. It took me by surprise. So WASD, WASD, WASD. Will I change the way I trade it next time and hit the break even button? I'm not so sure. Normally it does follow through, but that's a method you could use to protect yourself. You can hit the break even button, and you know that our software also has target one stop move. If the software hits your first target, it can automatically move the stop. So it could have been prevented. I could have been a hero and a winner, but I was trading it the way I always do. I traded my plan. I was a tiny bit lackadaisical, maybe not really going to take blame, although as a trader, we tend to blame ourselves. But it was just a trade that didn't work because it reversed real quick. So we'll get it next month. The final event for Wednesday in our trade room was the 10-year bond auction. Now, I noticed on the DMM that we had a bunch of losing trades that barely ticked our bracket. In other words, we use a 2-tick bracket on bonds. If the market moves 2 ticks, it fills us and brings us into the market. We had 2 losers in a row, maybe even 3, going back November, December, and January, because these bonds reports have been challenging, these auctions. 3 in a row that looked to me, by doing some research, that if I increased our bracket from 2 to 4, we would get a winning trade. Also, we had 3 losers in a row. The odds and probabilities were in our favor for a winning trade. That's exactly what happened. The bond report had a very nice move. Unfortunately, ZB is very liquidity challenged, and it didn't fill my orders, even though it went through and hit my target of 8. It missed my target by 1 tick. I had an 8-tick target. It went 7, and I was able to grab 3 ticks, almost $100 on the bond report. But the key is this: the power of testing. The power of testing. I looked back. I tested those entries. I knew that if I made the bracket bigger, we had a great opportunity for a winner. That's what happened. So the bond report was a winner based on analysis, thinking smart. All right, so now it brings us to Thursday, and to me, the most important report of the week and the most important valuable lesson that we had all week. A phenomenal trade room, because we've had a CPI setup that hasn't worked in 4 months. We've traded gold. We've traded the NQ as breakouts, where we put a bracket and we try to burst through the bracket either up or down. And the volatility on these trades, the movement has been so fast and erratic that the trades have really struggled to work. The NQ overall has been profitable, but it's still been not an easy trade. We went and tested, looked back 6 months, and we found an alternative setup, the range trade, which many of you know we trade the API report that way. And it was a fantastic winner on NQ CPI. We entered later than normal. And I also discovered through testing that the ES was an excellent breakout. And that's exactly what happened on this report. The NQ we traded live and had a very nice profitable trade, $400 in a matter of seconds. And the ES was a very, very excellent trade going forward. We'll trade both. People have the opportunity to trade one or the other. But again, what did we learn? Testing, testing, testing. The power of testing. I say it over and over. The power of testing is the key to learning and finding out what's going to work, help to make you profitable on the trades, and help to keep you safe if a trade isn't working. It's not always you're going to make money. Very often you're going to find out, hey, I shouldn't be trading it that way. I have to find an alternative. And that's the important thing about testing. So the CPI room, it really was fabulous, because we found a new setup that we may be able to also apply to some of our other bigger, faster moving reports. So we're very excited to do a lot of testing this month on some of our other reports that we could trade even better. So that's the key, folks. We're always looking to trade better. Now, interestingly enough, this past week, the CPI report probably would have worked on all our previous legacy settings, I'm calling them, our legacy setups. But again, when you have 3-4 trades in a row that are challenged, such as CPI with gold, you must find an alternative. You can't just sit back and say, well, I'm not going to trade it. You have to find another way, because major reports almost always give you another way to trade them. And I want to thank Chantal, who works for us in the background. She found another way. on the range trade for the NQ for the CPI report. Great trade. Natural gas, also on Thursday, has been a monster that you didn't want to trade for quite a while, since September. It's been difficult, but it's gotten better over the past 6 weeks. Not sure that I want to trade it on a regular basis, but if you pick and choose your spots with natural gas, you might have the opportunity to trade it as a winning trade. For instance, if you have 2 or 3 bad natural gas reports in a row, that might be a great time to take a live trade after the third or second loser in a row, because most of our daily reports, the DMMs, they don't not work 3 months in a row. They usually, they might not work twice in a row, and then you can take a probability trade, even if it's an instrument or a trade you don't like to trade. So that's another way you can think about trading news events and appointments. But you'll notice that this week's natural gas went back to its losing ways. It would have been a stop out. Members that traded it in the room did lose money on natural gas. It was a stop. However, our after the news 3-minute setup, 3 minutes after the natural gas setup, it did work. There was a second trade, a first news setup trade that I believe I missed because it was 2 minutes and about 40 seconds after the news. There was a signal. We used the squeeze indicator to give us that signal, and it actually came at about 2 minutes after the trade. The original breakout trade, I should have taken it short there. It would have worked perfectly, but it didn't fit the rule. And I waited, and we waited in the room for the second, which really was the first official natural gas after the news trade. And even though there was a downward trend in natural gas, meaning that natural gas had been falling for most of the day, the after the news trade, even though it was an up move, still worked, showing the strength and power of our after the news setup. And there it is. It worked. So the rules we go over in our natural gas trade room all the time. So if you can make it into our trade room, we'll teach you how to do this setup. Natural gas was a loser on the breakout, but a winner on the after the news setup. All right, we got 2 more events to go. We had the 30-year bond report, and that was Thursday afternoon. And what happened was the president was speaking live, and one of the Fed members was speaking live, Bostic, I believe. And before the trade, it was causing bonds to move pretty unnaturally with a little bit too much volatility, and also gold. We have a secondary setup. It did turn out. So what happened is I decided, for safety of members in the room, not to take the bond trade because they just stopped speaking only minutes before the bond auction took place. And I felt it just made the auction results potentially too volatile and possibly too risky for our members to take. Interestingly enough, a couple of members did trade and made some really good money on the report. The ZB moved nicely, and our gold setup would have been a 10-tick winner. But I have to be responsible for members in the room. And if I'm trading alone, sometimes I would make a different decision. I definitely made the right decision. And then our final trade room of the week was University of Michigan, preliminary data. And preliminary data is more impactful than revised data. Preliminary is the first report of the month. When there's revised data, it's a second report, and it just as it sounds, they revise the data, so it's not quite as impactful. But the University of Michigan is an inflation report, and it's a consumer confidence report. The news offset was unbelievably negative in terms of the consumer confidence, and that's what drove the report. But ironically, we had small targets, only 5 ticks and 10 ticks, or even 12 ticks, I believe. We used this as a breakout trade, and it didn't even barely hit my first target on the initial news move. So I was concerned, and I was not really that willing to stay in the trade, but I made a miscalculation. Let me explain what that miscalculation was. So it hit my first target, and I moved my stop to break even to protect my profit, but it was only 5 ticks. So when you're stop is moved so close to the price action, there is a strong possibility you'll get taken out of the trade before it has an opportunity to keep moving. And that's what happened in this trade. And that's life. That happens all the time. So we had a winner, but it was small. But I didn't notice that there was a high of the day that most probably once I saw it, I realized this high of the day is going to get tested. And I really wasn't thinking about it until I got stopped out of the trade. So I pointed that out to members. And also, we realized as well, because the news offset was so powerful and there was never any danger to anyone's stop on this trade. It never came close to the stop. That if you really think about it, I should have stayed in the trade. And look, every trade, even for a professional like myself, is a learning experience. You're always learning and trying to get better. Trades always need to be managed or often need to be managed. And sometimes you'll move your stop. Sometimes you'll move it 2 ticks. And sometimes you'll move it all the way to break even. This particular chart setup really told me don't move the stop so close. Sit back, relax. You had a great news offset that should work in your favor. In other words, gold normally used to go up on bad news. The consumer confidence was very bad news. Our stop wasn't being challenged. I could have stayed in the trade and it would have hit my targets. And instead of making $50, I would have had an opportunity to make quite a bit more. But these are the lessons you learn. So I always think about what I call a magnet trade. Gold, oil, natural gas, they love testing highs of days and lows of days, particularly when those levels haven't been recently tested. And that's what we had with gold this morning on the consumer confidence trade. So just some knowledge about how you might want to trade it if you're trading it alone and not in the trade room where it might be discussed. All right. So that's my weekly wrap for this week. And now I want to just talk about the upcoming schedule for next week. There's some great looking trades, great events coming up for next week. Okay. So this coming week, Sunday and Monday are quiet. There's not much going on, not even reports that we're going to be watching, events that we're going to be watching. Tuesday morning at 5 a.m., I want to watch the Eurozone GDP, and the German ZEW economic sentiment report. They're trading together at 5 a.m. on Tuesday, and I would look at the euro on that trade. If you get the data for the DAX, the German DAX, that's an index that could also move on that ZEW economic sentiment report. Our first trade room is for core PPI and Empire State Manufacturing, and that's Tuesday at 8 a.m. And then we have our API report Tuesday at 4 p.m. Wednesday, we've got the British CPI report, and that is an official daily market mover. That's a daily report that we're issuing. We're bringing that report back. It's starting to move again. And then we have a family money trade Wednesday, 8 a.m. for core retail sales. I want to talk a little bit about family money trades as well. Let me get there and I'll bring it up. 8 a.m. also, we've got Canada's core CPI, which has been starting to move. And at 9:15, capacity utilization event. But all three of those events will stay in the trade room starting at 8 a.m. for core retail sales, Canada core CPI, and U.S. capacity utilization. Crude oil inventories is a 10 a.m. trade room. The 20-year bond auction is at 12:30 p.m. on Wednesday. You can see Wednesday is packed full of reports and possible live trades. The big one this week is FOMC minutes at 1:30 p.m. on Wednesday. That event, I believe we have a really good setup for it. It's almost, in my opinion, going to be a family money trade, depending on how things work this week. But I'm feeling good about our setup for the FOMC meeting minutes. Also, 7 p.m. on Wednesday evening, we have Australia jobs. We're now using the trap trade for that, and that's verging on a family money trade as well. So if you can make those trade rooms, including 20-year bonds, which is one of the better trading bond reports. So Wednesday, looking very interesting. Thursday, 8 a.m., you've got building permits and housing starts with the Thursday unemployment numbers and Philly Fed. That might be a little bit too much news to trade all at once. So maybe an after news trade. We'll see. And then also Thursday, of course, at 10 a.m., the natural gas trade room. And then Friday, to wind up the week, 8:30 is Canada retail sales. That's when the event takes place. We're just watching that, not trading it with a trade room. Our final trade room of the week is existing home sales at 9:30 in the morning on Friday. That particular home sale report has been working, so we will possibly trade that live as well. So an interesting week. The key reports are PPI on Tuesday at 8 a.m. trade room, the retail sales on Wednesday at 8 a.m., 20-year bond auction 12:30 p.m. on Wednesday, the FOMC minutes 1:30 p.m. trade room, and Australia 7 p.m. on Wednesday. Those are the big potential big movers for the upcoming week. So folks, I went way over my 10-minute limit. I'm 30 minutes in. This is a podcast. It's audio, but there are some video moments. If we get it up on YouTube, which we will, you'll be able to watch it. So I hope you all enjoyed this first time weekly wrap with the weekly schedule. You know who I am. I'm Lee Goldstein, the trading director at 10 Minute Trades. Thanks for giving me your time and watching the podcast. See you next week in the trade room.